Getting beat up by spreadsheets in your brewery? Don't let those dumb pivot tables bully you around. Get rid of the spreadsheets and the other clunky brewery software and get Ollie, the smart and affordable way to manage your brewery. Learn more at getollie.com.
Hello, everybody, and welcome to our presentation on how to build a brewery budget that you'll actually use. And I guess I'll have to apologize in advance that you're going to have some spreadsheets in this presentation. I promise they won't beat you up, but that was a pretty funny commercial. So the reason for putting this together is that I work with a lot of different breweries, and I'll generally start our engagement by asking the question, do you have a financial plan? Do you have something that is, readily accessible, whether on paper or in a software system or a spreadsheet? Do you have a budget? And 2/3 of the time, the answer is we do not. Maybe 1/3 of the time is, well, we do, but we don't really use it, or we never quite finished it. And sometimes, amazingly, people will be like, well, I don't really think I need one. So hopefully the takeaway for today will be, you really do need a budget because it's your financial plan. If you want to get from where you are to where you want to be, stands to reason that we need to map it out. So that is what we're going to talk about today. And this is your time. Your time is valuable. And it's important to me to hear from you on what's most important. What do you want to get out of today? What's interesting to you? What are you struggling with? If you could solve one problem around this concept of budgets or financial planning, what is it? Don't overthink the question. Pop it in the comments. I really would love to hear from you so that I can make this valuable time and you can get what you're looking for. All right, so let's talk about the brewery budget problem. So why do budgets fail? And this is just a short list of things that I've personally experienced or heard from, folks over the, 2.5 decades that I've been working in the beer business and with numbers, that these are the reasons why breweries fail. That why we don't have a budget is these types of thoughts. Number one, they feel like it's just too complicated. It's overwhelming. I don't even know where to start. Or once I get going, it just takes forever and it's not accurate when it's done, and it's even obsolete because business moves so fast. Or it feels like it's impossible to project the future. Like, I can't project what's going to happen tomorrow. How am I supposed to project the next year? It doesn't, these are the feelings that we have. And then sometimes it's management creates the budget and gives it to managers and staff, and it's just kind of pushed down on you. I don't know where these numbers came from. They seem arbitrary and unachievable. So these are all bad things. This is fundamentally, I think, in a nutshell, the problem with brewery budgets. So what's the solution? So what we're going to talk about today is the solution to the budget problem. And I'm framing this as a 5-step brewery budget solution that you can follow. Many of these steps are very simple, but I believe powerful, and can get you working towards your ultimate goal of having a financial plan, a roadmap that can get you where you want to be financially. So the first step is to begin with the end in mind, to really set those high-level targets. And as obvious as that first step is, it's almost never done. Most folks that I work with are immediately jumping into the sales forecast. Like, how do we, or maybe we're budgeting, some new products that we're going to take on or expenses, and we get right into the weeds. So I would recommend don't do that. Start very high level and begin with the end in mind. What is the goal that you're trying to achieve? Now, most people, if you ask that question and you sit with it for a bit, the goal is, well, I want to be profitable. I want to be cash flow positive. I want to work on my business, not in my, okay, those are great goals. Let's start with that and simplify the objective. And then we get into all the details. So step one, begin with the end in mind. What does success look like for you? And I'd even encourage you to write it out in words, because a lot of times we do get hung up on the numbers, the tools, the overwhelming task. Just write it out. What does success look like? Number two is identify your stakeholders and the requirements. So you might think like, well, who is this budget for? First and foremost, the budget is for the ownership of your brewery, for your managers and your staff who are going to kind of need to know what's the plan, where are we going, and how are we going to get there. But you may have other stakeholders such as banks, and they've got requirements. You may have outside investors who have requirements as well. So we'll get into how to do this and how to think about it. I'll give you a couple of examples. The third step is outline your team and your expectations of your team for creating this plan or helping you do so. And then critically important and super simple is setting a deadline to finish. I'd say most budgets don't finish because we just didn't set a deadline. We didn't outline who was going to be part of the team to do it, and we didn't set the proper expectations. The fourth step is to use financial templates and models, and even there's apps and software, which I'll share with you, that's super helpful as well. So you don't have to recreate the wheel. And then lastly, this is the part of like the budget you'll actually use. The single best thing that I've ever been involved with as it relates to, financial training and education and actually getting results from a budget are to hold weekly financial huddles. And again, I'll go through the whole framework on that and give you some kind of plug and play templates that you can use. So that's the problem. That's the solution. So what does life look like after you follow these steps? You build a budget that you'll actually use. The best part is no more guessing, because a lot of times our business feels very out of control. If we look at the bank account and the cash is there, we feel good. If there's no cash, we feel bad. That's a tough way to run our business. So we really want to know exactly where the money's going, when it's coming in, have a clear plan for all of our targets, sales, margins, cash flow. We want to feel in control, because a lot of times business feels very out of control. So we're going to use simple, flexible tools that can help you make smart decisions in real time. And that's important because business does change really fast. And having a budget that we sort of build and set it and forget it is simply not going to work. So we have to be flexible. We have to adapt with the changes. We're going to have team alignment and accountability. So each department owning their numbers. That's so important, is to take that responsibility and accountability, but do it in a fashion where we're educating our managers and staff on how this actually works. And then they can contribute to the progress and profitability. And lastly, confidence and clarity. So we're going to stop reacting to financial surprises, and any surprises, they happen all the time, and start planning for that growth and that sustainable profit. So hopefully that sounds good to you. Sounds good to me. So this is me, Kary Shumway. I'm a CPA, CFO, been in the beer business 25 years as a CFO for a brewery and a beer wholesaler. And along the way, I've been documenting what I've learned, because I'm getting older and I'm forgetting stuff. So I got to write it down for me, but I'm also sharing that with those in the beer industry, trying to help you create a financially profitable beer business. So we have craftbreweryfinancialtraining.com, lots of free resources there. Beer Business Finance Association. That's our membership, our network of brewery owners and managers from across the US and abroad, where we come together. We do our monthly meetings where we're really sharing ideas and best practices around how to run a financially sustainable beer business. So if that sounds cool to you and you want to learn more, you can shoot me an email, Kary@beerbusinessfinance.com. Shoot me a text or a phone call. There's my cell phone there. Now, I'm going to cover a lot of ground here, and the free brewery budget toolkit, that little fancy QR code, if you scan that, you're going to get all this information, downloadable checklists, spreadsheets, all the things, and videos from me kind of talking through each section. So that's something that you can just have, you can share with your team, and that can be a resource for you going forward and beyond into the future. All right, so we're going to get into the 5 steps, but just as a little bit of a small backdrop, like why do we need a budget? I think we know, but maybe it's worth reemphasizing, because again, a lot of breweries I'll talk with, they're like, some of them are like, yeah, I don't know. I'm not sure if we need a budget. I'm like, oh my gosh, you need one. It's your financial plan. So this is your game plan, and without it, we really are not sure where we're going. We're flying blind. So this budget, this financial plan is designed to give you that clarity and confidence and control over your numbers, so you can build that stronger, more sustainable brewery business. And why else do you need a brewery budget? There's lots of details. We want to see the full financial picture, know where your money is going, where it's coming from, what are the timing of those cash flows. We want to be able to control those costs before they control us, because very often it does feel like that. So identify and fix any problem areas. We want to plan for seasonality. This is obviously a real thing. So smoothing out the highs and lows, because it can be tough. Those slow months and quarters can really put a dent in the cash flow. We want to set those clear sales and profit goals, get everybody aligned and focused. And this word is not to be underestimated. Focus is so important. If we want certain outcomes, really the X factor is focus, and setting clear goals and targets, focusing on them every day. Where do we need to be? Where are we? What's the gap? Close the gap. Repeat is going to be simple, powerful approach for you. Measuring performance. Obviously, we've got to track actual versus forecast results, make informed decisions fast. We want to reduce stress. That's always nice. And we're guessing. And that good budget can give you a peace of mind. And then ultimately, we're trying to build a better, stronger, more sustainable business into the future. The other thing I would have you consider is the word budget is not maybe the best word. So reimagining that can be useful. I like the word, roadmap. It's your financial roadmap. It's your blueprint. It's your profit plan, financial plan, forecast. I think these are all better words than budget. I use budget because everybody knows what it means, but unfortunately has a bit of a negative connotation or a marketing problem. So I would encourage you to think about it that way as you're talking about, hey, we're building our roadmap, our financial roadmap for the future. Because words matter, and better words can help. We're all in the business of selling something. So we need to sell the process to build an amazing financial roadmap. All right. I also want to propose that you think different. So if you're in a position where you don't have a budget for any number of reasons, we want to try a different approach so that we can actually get that budget done and use it. So sometimes we need to take different actions. We need to think about the process differently. So here I want to kind of give you 5 ways to think differently, and then 5 resources, 5 books that you can use to get started. So the first is around this concept of inclusion. I'm a huge fan of open book management. You don't have to go, into the deep end of the pool right away, but including your people is a game changer in terms of getting the budget done, having a really great one, and then executing and actually using it. And The Great Game of Business is a book that I would highly recommend if anyone's interested in learning more. I read that book about 20-something years ago. Game changer for me. The next one is weekly huddle. So this is about execution, right? So you got the financial plan. That's great. Good start. How do we execute? How do we make this an activity of daily living? Weekly huddles. That's the way to do it. And this book called The Open Book Experience has, I think it's like 100 different examples of companies using Open Book and how they're doing the execution phase of it. So super helpful. The third idea is about creativity, right? So we want inclusion to get people involved. We want to execute so that we're using this on a regular basis. And we want creativity because let's face it, we got right side, left side of the brain. Let's get creative and have some fun with it. And I think that's sort of like, might seem odd to say, hey, let's have fun with the budget, but it can be really, really cool because all the budget is doing is saying, how can we make an awesome business that's profitable and cash flow positive? And if you include your people in this and you consider a concept such as the workshop or playbook, these are really cool ways, strategies that you can involve your people in a fun way to think about how you might grow sales, to think about how you might reduce cost of goods sold, improve margins, reduce expenses, improve cash flow. Now, I know that sounds very technical, but once you kind of drill down, you might say, how are we going to drive taproom sales? All right, let's run through this workshop or playbook concept. You get maybe 3 or 4 of your key managers, you get a taproom manager, some staff, maybe your general manager. And the question before you is, what are we going to do to drive taproom sales? Because let's face it, everybody's having the same problems. It's tough to get people in, get them to stay longer and spend more, come back more frequently. If those are our objectives, how might we do that? So the workshop or playbook has this concept of working together alone. In other words, it's not a meeting where we all say, hey, I have an idea, because usually in those meetings, the loudest voice wins. And the quiet voice might have the best ideas, but decides, I think I'm just going to sit back and let this play out. So this concept is everybody gets some sticky notes, and you take 5 minutes and say, all right, we're going to write down all of our ideas. How are we going to bring in more people into the tap room? Go. You aggregate your ideas, you vote up, vote down, vote. Nobody really knows who wrote what, and there's a whole process behind it. So if you can certainly just Google workshop or playbook and learn a lot more about it. I love it. So much fun, and it brings that creativity. The next idea is decisions. How do we make better decisions? Because we got to make decisions every day. And I love these models, 50 strategic models. You don't need 50, maybe 3 or 4 that can really be helpful. So check out the decision book. It has models, a lot of graphics, very easy read. It sounds kind of like, that sounds a little too heady for me, but it's actually really approachable type models. And then lastly, asking better questions. How do we ask better questions so that we get better answers? So it's kind of a 2-for-1 here. The Book of Beautiful Questions, highly recommended. Just love it. And then The Coaching Habit, which is also another great book. So check those out. Choose one. If you had to start with one, I'd go Great Game of Business. It just kind of covers the whole gamut, and it'll help you really think differently. All right, so that's backdrop. Now let's get into the nitty-gritty. Our 5-step brewery budget solution. And just as a quick reminder, step 1 is begin with the end in mind. Set those high-level targets. Step 2, identify your stakeholders. Who's going to be using this? When this financial plan is done, is it going to satisfy the requirements of your stakeholders, your banks, your investors, your ownership group, your management? Third step, outline your team expectations and set that deadline to finish. Get it on paper. Be very clear about this. Be disciplined. Without this, it's really hard to stay on track, and most budgets don't get done if we don't have this in place. And I've got a very simple Word doc that you can download and grab and use for this purpose. Step 4, financial templates and models. I'll have some of those for you. And then the weekly huddles to make sure we're executing, we're actually using this plan to achieve our goals. So step 1, begin with the end in mind. What does this mean? So first is have a definite chief aim, a very specific target for what you want. Have a plan to achieve it. That's our financial plan. But beyond that, our financial plan has to have, what are we going to do exactly in order to achieve these? Because I've seen a lot of plans where it's like, yeah, we want to grow 10% in sales next year through a tap room. Great. How are we going to do that? Well, we're going to improve market. It's not specific enough. We got to be like, exactly how are you going to do that? Exactly what process goals are you going to have to achieve that? A sense of urgency is important. We got to act now. We have to be checking on this every single day. That's that focus again. A sense of possibility. Here comes that creativity. We really want to have that feeling like we can do this. So that's so important. And then again, highly specific, so that we have very clear targets for our team. And here's what that might look like if you take as an example. So if we think about the first one, definite chief aim. What does that mean? How about this? Our bottom line objective is 15% of net operating income. So that means I want to see, when I look at the bottom of my income statement, net operating income is going to be 15% of sales. It's a good goal. It's arbitrary. You want to look historically and see if that makes sense for you. But how about that? That's just an example. The next one is a plan to achieve that. So we want to have process goals that support the outcome goals. Because again, very often we think about goal setting in terms of, I want to grow sales 10%. I want to do this. I want to, it's all it's great, but these are outcome goals. These are the result of something happening. And the something happening is process. What are the things, what are the steps, what are the actions that we're going to take specifically in order to support those outcome goals? So we might think, if you're in distribution, what are we going to do in order to sell more beer through our wholesaler or through our self-distribution unit? What are the process goals that we might think about? Well, it's account visits, right? Well, how many doors are you knocking on? How many new relationships are you building? Those are process goals. You may or may not get the outcome that you want, but you know that it's more likely than not leading indicators. Your more visits, your more relationship reach outs, you're more likely to get those outcome goals, get new placements, get more shelf space, get more, sell through in those locations. The third component of this, the sense of urgency. So again, this daily, weekly gap analysis, it's just so simple. It's like, what's your target? Where did you, at the conclusion of the day or the week, where did you end? What are your gaps? Are you short? And what are you going to do tomorrow or next week in order to close those gaps? Repeat and repeat. So focusing on the very specific targets that you've got. Sense of possibility, engaging and inspiring your team. It makes a real difference. And then lastly, being highly specific. Here's where key metrics for each department can come in. Identify your departments, your department leaders. Everybody gets a number. So that's nice and specific, so everybody's sort of tied into the goal. So that's step one. Step two, identify your stakeholders. So as two examples, if you've got debt, you're probably dealing with a bank. If you've got outside investors that came in, you're dealing with folks that are going to need some kind of reporting requirement. So let's define what that is. So everybody's situation is different, but let's just say you have debt and you've got outside investors. It might look like something like this. So your banks, you've got debt, you've got a repayment schedule. We call that a loan payment schedule, amortization schedule. Super important to know what that is and bake it into your financial plan so that when you're beginning with the end in mind, we want to make sure we create a financial plan that satisfies the bank, satisfies our investors, satisfies our cash flow, meaning the debt service or the payment obligations for investors is covered in our cash flow plan. So for banks, they use these loan covenants. So they really want to look at something called a debt service coverage ratio, maybe a leverage ratio. These are super fancy words, but look at your loan documents and see what these are. If we can't find them, call your banker. They're usually very happy to tell you. But a loan covenant basically is a promise that you make to the bank. In addition to, hey, I'll pay the loan. It's not enough just to pay the loan. We need to make sure that we're covering our debt service coverage, which basically means what's the cash flow in and what is the cash flow out to service the debt. And that ratio of in to out needs to be 1.3 or more, meaning more cash coming in than going out. And these numbers will vary depending on what your loan documents say. So really just putting that out there, like understanding who are your stakeholders, what are their requirements. If you've got investors, they want to see, most likely, some kind of monthly or quarterly or annual reporting package. What's the income statement? How's the balance sheet looking? What are cash flows? Kind of tell me how we're doing. They might need distributions to cover tax liabilities. And if you're set up as that type of corporate entity, like an LLC. So sometimes we're profitable as a business, but we don't have any cash. So we need to kind of plan for both sides of that coin. So that's step number two. Identify your stakeholders. Who are they? What do they need specifically? Make sure it's covered in our plan. Step number three. So this is really outlining your team, outlining your expectations, and setting your deadlines. And if there's one takeaway from this slide, it's deadlines are essential. Got to set the deadline. It sounds so simple and obvious, almost never done. So set that deadline and work backwards from it. If you're on a calendar year, you might think about having the first draft of your budget due in the middle of November, second draft 2 weeks later, early December, and your final plan maybe the middle of December. So that gives you enough time. It's, we're recording or doing this live here on the 7th of October. Now's a good time to get started. We're kind of in that budget season. So think about it. Doesn't have to follow this, but you have to have a deadline here. So when you're outlining your budget team, your deadline, we want to here again be as specific as possible. So we think about what are the components of the plan? Like what is the financial plan? Break it down into its components: sales plan, margins, operating expenses, capital spending, loans and debt planning, and assigning an individual to each of those sections. So who's your team? What are the expectations? So as your first cut, you may say, all right, sales plan, we need to build that. Jack, our sales manager, you're in charge of this. All right, cost of goods sold and margin. Joanne, as our inventory manager, that's you, and so on. So who are your folks that are going to be in charge? Breaking up the responsibility checks, it's a benefit for so many reasons. One is it's going to take, if you're the owner trying to do everything, that's going to be really tough. But if you can engage your team, include them, give them these expectations, you're really going to leverage up your team. And furthermore, you're going to get better information, and you're going to get better buy-in when it's time to execute on this plan. But it really starts with a very simple outline. And again, I've got in our downloadable materials this basically budget preparation outline. So 1-pager, 2-pager, basically you're listing out the due dates, first draft, second draft, final. You're going to list out each section of the plan that needs to be built and who's in charge. You're going to have an owner. Each one has to have an owner. And then you might have 3 to 5 bullet points of what the expectations are. So if you think about your sales manager, we need to forecast sales for the remainder of the current year, look at it by month, do it on a kind of a high level. Then for next year, we want to forecast by month. We maybe want to break down the particulars of what are we selling by brand, by package. We want to get certain data. Maybe it's from our brewery management system or from our point of sale, depending on what we're projecting. But basically having this document to kind of keep everybody organized. So those are the first 3 steps. And I think the beauty of those is you can do them relatively quickly. Begin with the end in mind, identify your stakeholders, create your deadlines, and outline your team. That's it. I like the way that flows because it's a relatively light lift. We're not digging into the details or getting lost or overwhelmed just yet. But that's really going to set the stage for what's coming next, which is, all right, time to roll up the sleeves. Got to get some financial models. Now it's more traditional financial planning. All right, we're going to have some numbers and some data and some formulas and some things that we need to think about and decisions that we need to make. So when I'm starting a budget, I'll usually start with a simple model. And that simple model for me is kind of just setting, it's setting expectations, but it's also the context. Like how are we actually doing in terms of trends? How are we doing, relative to, sales trends and which revenue streams are growing versus declining? How are we looking on our overall on our cost of goods sold? So it's very high level to start. We're going to use a lot of estimates. I'm not going to look for a lot of input at this point. I'm simply going to start high level, simple model. And I'm going to show you that spreadsheet here in a second. The next is now I'm going to get more complex. So once I've sort of set the simple model out, I got a pretty good sense as to what I think sales margins, expenses, and bottom line is going to look like. A real quick look at cash flow. I got a little momentum. Now I want to get into more complex. So here I'm going to have a higher level of input. I'm going to have managers involved. I'm going to have more supporting schedules. And all that really means is if you think about payroll expense, that's one line item, maybe multiple line items on your income statement, but there's a lot that goes into that in terms of, well, who have we hired? Who are we going to provide pay increases for? Are we going to add any new positions? What do the benefits look like? Is there a commission streak? So payroll can get pretty complicated. So a supporting schedule just basically is a listing of who's on your roster, what positions are you looking to add or change, what are your current pay structures, and what does that look like into the new year in terms of changes, and then maybe factoring in some bonuses or commissions or any variable compensation. So that's an example of a supporting schedule. And most of that you've already got, right? If you've got a payroll provider, you basically just go in and dump the data into a spreadsheet if you want, and then kind of update it and manipulate it. And again, I have templates for you on this that will kind of walk you through how it works. And then, you're going to have data for different parts of your financial plan and stuff so you can analyze and support your forecast. Now, one way to think about these two models, the simple model and the complex model. The simple model is like if you want to go fast and get it just done, you go alone. But if you want to go far and frankly have a much more accurate and a forecast that people are actually going to use and take ownership of, then we want the complex model. So with that as our backdrop, I'll kind of take you through each of these. Understanding these numbers are really small, probably difficult to read. Again, I would point you towards downloading the Brewery Profit Toolkit, so you can see all these, download them, play with them, have fun. But basically, the simple model is just a summary of your income statement listed out by month. So what I'm going to be looking at as I'm kind of drilling in here is like, well, all right, if I do sales, what are my different revenue streams? Wholesale, self-distro, taproom. I might even break out taproom into food and non-food. What are my margins on those? What are the expenses, that operating expenses? And then what's my bottom line or my income look like? And then I want to compare that to my debt service. I've got loans, I've got monthly loan payments. What are they? How does that kind of stack up against my net operating income, or my, what we would call EBITDA, that earnings before interest, taxes, depreciation, amortization? So kind of sort of cash flow. How does that compare? Cash flow in versus out. So I get a real quick and dirty of, am I going to have any problems here? Like, do I have any shortfalls? So the very bottom line is estimated cash flow from operations. So January, February, I'm looking okay. Oh, geez, good. March, April, that looks a little dicey coming up. So, you can kind of say that's probably not going to work. So on a top level, simple model, I can get it done relatively quickly. There's going to be a lower degree of accuracy because I'm really just relying on trends and some estimates to plug into this model. But it's something to get you started, sort of like a little appetizer before we get into the main course. And the main course can look something like this, a more complex model. So again, a small spreadsheet, hard to see. We've got all this available for you, but along the bottom are all of your tabs. And each of these tabs is going to effectively be a supporting schedule for the big model. So if you've got taproom and self-distro and maybe wholesale, each of those is going to need a different sales forecast because there's different underlying assumptions. Taproom, we're obviously looking at customers that come in and average spend. Self-distribution, we're looking at how many retail accounts are we going to and what are they purchasing? What's the relative growth? Things of that. So you just kind of keep digging in and digging in. But this is all laid out. You basically just go tab by tab and fill it out. And you're going to fill out cost of goods sold. Well, what are our margins on products that we sell at wholesale? Sometimes we'll get into a tab, be like, I have no idea, or we need to figure that out. So then we got to figure that out. And so those can take a little bit of time, but super important to know these are critical questions. What are your products costs? What are your relative margins, especially at self-distro and wholesale? And in the tap room, obviously you've got, sales categories with varying degrees of margins. Beer is great to go. Beer is pretty solid too. Food might not be so good. And then we might be losing money in other areas, but we need to understand the cost of goods sold for each of the revenue streams. And this complex model, again, can help with that. So it walks us through sales, margins, all the details of expenses, your capital spending, what are those big ticket items that we're going to buy. So my recommendation on these is to think about it in terms of the budget. The financial plan is just a big puzzle, and you can only do a puzzle one piece at a time. And so what are the major puzzle pieces that we want to think about? So we've got the sales forecast, our cost of goods and margin plan, and our operating expense plan. That's going to form primarily what we traditionally see as our financial statement. It's like an income statement that's going to show you sales through your profitability. Then it's your capital expense schedule. What do we need to buy? What do we need to invest in? Maybe it's a delivery truck, maybe it's warehouse equipment, it's new taproom equipment. What are those capital expenses, those big ticket items that we might need? And then there's our debt service loan schedule. Again, so important. If we think about like what's one reason why breweries are struggling right now, it's usually debt, because we've got too much debt. We got to service the loan. The bank doesn't care if fewer people are coming in and spending less. Every month that loan has to be paid. So really understanding how that fits into your overall financial plan is just critical. Cash flow drivers. What are the other cash flow drivers? We've all got inventory. Inventory takes cash. The more inventory we have, the less cash we tend to have. So what are we doing in order to manage inventory? What are we doing to track, like, do we have too much? Do we have too little? What's the sweet spot? Where should I be? There's benchmarks all around things like this. Accounts receivable, if you're with wholesale or self-distro, can be a huge driver of cash flow. Accounts payable, we paying too soon, we're not paying soon enough. How does that play in? And along with capital expenditures and debt service, what are we going to buy and where are we going to get the money for that? So start with just a very simple look at the puzzle pieces, and here they are. And when you get into the more complex model and you're building it, I would encourage you to start with what feels most comfortable. This is not starting at 1 and working your way through 10. This is, it's all got to get done. Let's start with maybe something that I kind of already understand, right? Maybe I'll start with the capital expense schedule. These are things that I want to buy. I know we need to buy new kegs, and we've priced them out. It's, we're going to buy them. So let's get that on the schedule. What else do we need? Well, we really need to remodel the tap room. And we've already kind of talked to some people. And so you'll build out your list of capital expenditures. It makes sense. And now we're just sort of getting it into our financial plan to say, all right, well, when am I going to buy this thing? How much is it going to cost? And how am I going to pay for it? I'm going to borrow for this. We have extra working capital. So the idea there is start first with what feels most comfortable, and you check it off, and man, that feels pretty good. And then you move to the next one to be like, all right, well, let's go debt service, right? I mean, we only have one loan. I pretty much have the amortization schedule down. Let me make sure that's updated. Good. Let me look at what are those things, those covenants. So so you have a debt service coverage ratio. Well, what is that? What do they need from me? Dig out the loan or call your banker. Okay, I got it. There's a leverage ratio. So on and on. And it gets, depending on where you're at in terms of your comfort level, the data that you have, you jump around and you just pick the one that you want to start with. Now, most people start immediately with the sales forecast, which is fine if you've got good data, good historical, good sense on trends, a good understanding of how you're going to map this out. But it can be complicated too, especially if you're in the early stage, like if you're startup phase or you haven't even been around a year, you don't have a lot of historical data. It's really tough. That sales forecast can be really tough. So I recommend starting with those places that are more approachable. Now, operating expense for my money is a pretty good place to start too, because you generally know, this is the interesting thing about financial planning, is that you've got knowns and you've got kind of like unknowns. Like your known is operating expense for the most part. I know who I'm going to pay. I know what I'm going to pay them. I know what my rent is. My lease is fixed. I'm stuck with it. Now, sure, you might have some variables, repairs and maintenance. Well, I wasn't planning on that. But for the most part, you control the expenses that go out, notwithstanding that, costs are going up and so forth. But you got a fighting chance there. So if you go through it, and maybe that's the trajectory. You start capital expense, you do your debt service, you do your operating. Now you're halfway done with the plan. So now we just kind of keep going. So that's the idea. And then you build the puzzle. And I think if you think about it, you build the puzzle, you're doing the edge pieces first. I think I'm not a big puzzler, but I think that's how they do it. So you're doing the edge pieces because that's a flat one. That's got to be an edge piece. I would say those are the things that you understand intuitively. Maybe it's capital expenses. Maybe it's that loan schedule. And then the harder pieces might be, things like cost of goods sold. Geez, we never really got our hands around. Well, let's get our hands around it. These are some middle pieces that we need. So that's just some thoughts on how to, just like anything, big problem, break it down into smaller components, start with what you feel most comfortable with. It's all got to get done. All right, so let us talk about some details. This is my process. It works for me. I'll share it with you and obviously modify it as you like. So what I'll generally do when I'm starting, working with a brewery on building their financial plan, is we'll get in, if you're using QuickBooks or whatever, and I'll grab some data. I want some historical data. So you've been around, let's just say a brewery's been around, 6-7 years. I want to go with a 24-month rolling P&L and balance sheet. I want to see historically what is going on here. What are the trends? And then I'm going to use that information to project forward 12 months into the new year. And I'm going to build in some formulas so we can quickly and easily say, we think sales are going to go up this percentage, OpEx is going to go up this, so forth. General ledger holds the key to all your transactions, like all the details that happen in your business. So we would consider doing a data dump of your general ledger so you can easily look up the transactions. So a lot of times be like, wow, talk to me about insurance. Like, what's in there? Why is that so high? I don't know. And then you go into the general ledger detail and you can see it. Often something got misposted. Sometimes, wow, insurance went up a lot more than I thought. So the devil's in the details. And you don't have to do this data dump. You can always just jump back and forth to QuickBooks, for example. But it's nice to have it handy. And then I'll create supporting schedules, definitely for payroll, often for your leases, because leases are sometimes have a triple net component, which means you're paying for a lot of pass-through expenses like real estate taxes or common area maintenance, things like that. And those things can really, really blow up your budget if you don't have a good handle on what they are. So these are the details of like, I've shown you the complex spreadsheet. You're like, oh, there's a lot. Okay, so start with the historical data, project it forward, build in these formulas, use the transactions that you already have, and build out those supporting schedules. So it does, sure, it'll take some time, but you do it once or twice, you start to get the hang of it. Some fundamentals to think about as you're going through not just the financial planning process, but the implementation and the execution of this is, in order to make our financial plan usable, we need to compare it to what's actually occurring, right? So we need actual results, planned results, our budget, and then whether we're on or off plan. So a month-end process is critical in this approach so that you get complete, timely, and accurate numbers. Very often we don't, we get the numbers 3 weeks after or longer the month is closed. That's not timely. Complete, we missed posting this. So the process is going to ensure, just like making your beer, you have a process to make your beer. You wouldn't make it without all of your checklists or however you're keeping track of everything. Your financials are the same way. Year-end process, same as month-end, except we've got different procedures that we need to follow. Audits and reviews. Now, this might be if you're using an outside firm or you have an internal firm. Audits and reviews really just means somebody double checking to make sure, that the numbers are getting in the right buckets and, this matches up. Okay, standard operating procedures for your financials, just a deeper dive on those month-end, year-end processes. Like we've got to reconcile our bank statements. That has to happen every single month without fail. Well, what's the next? You got to count your inventory and analyze your variances. That's got to happen without fail. Accounts receivable, and on and on and on. So what are your financial SOPs? These are the things that are going to keep you on track. All right, so number 4 is obviously the biggest step, because you've got like all the meat of this. Like, wow, that's a lot of, I got to build this and I got to do that. And again, I would encourage you to say it's not going to get done all at once. Take it a piece at a time. Divvy it out to your team, include them. Know that it's going to, like they say, everything is hard before it's easy. This is no different, but it will get easy if you follow this process and if you stick with it. So the 5th step is like, we've built a financial plan. How do we actually use it? Weekly financial huddles are the single best way that you can improve the financial results in your business and actually use your financial plan. So I'm going to show you a model that I've implemented that you can use too. And it really centers around responsibility. Everybody owns a number, names and numbers. Everyone has access to information and everyone is expected to prepare. And the beauty of these weekly huddles is it's continuous training and reforecasting, because one of the problems we have with budgets is we build the budget, we set it and forget it. Business changes in 3 weeks, the budget's obsolete. That was a waste of time. We don't want that. So we create our forecast knowing that it's going to change and we're going to change it. So this weekly financial huddle approach is the form and the format to do that. So we come together, this budget's not serving us anymore. We're going to adjust sales. We're going to change operating expenses. We're going to do this. We've still got to be mindful of our cash flow requirements, our stakeholders. However, we can't stick our head in the sand. Be like, well, I don't know, the budget we created in October, we're not even close, but I guess that's not going to work. So reforecasting, and again, including your team. So people are coming to report their numbers. What did they say was going to happen? What actually happened? But the story of how they came to be, the actions they're going to take to continue to improve. That's really the magic of these, is the frequency and consistency within which you're looking at your financial results. And there's a lot of accountability. We're all sharing the numbers. Maybe you've got your taproom manager and your production manager. You've got an outside salesperson, an office person, a GM, whatever your team looks like, and they're responsible for those numbers. You're going to come prepared, and you're going to get a lot better information using a system like this. So the concept is dozens of minds working on the same problem. Maybe you've got 1 dozen, maybe you've got 3, but it's more than just one, and that's so important. And creating this concept of a company of business owners, because a lot of times in business, staff doesn't know how we're doing, but they're out there doing stuff that's going to affect your financial outcomes, but they have no idea what they're doing and how that affects those financial outcomes. So it's our responsibility as owners and managers to show them that. These huddles are magical in the sense that the budget not only creates itself, it recreates itself, and it's going to update in real time for what's actually going on. And the creators have a stake in the outcome. They understand how the numbers work. So the stake might just simply be, I know the expectations on me. I got to prepare for this meeting. I got to know my numbers. Or it may also be tied to a bonus plan, some sort of incentive structure that can just really cement the importance of this. So one of the pushbacks I get on this is, another meeting. Yep, it is another meeting, and it's exclusively focused on the financial results. So if that's important to you, you'll make it a priority. Most breweries do not. We say it's important, we don't do it. And I don't have time for that, and this and that. But a 2-minute drill is really the agenda that I think has worked best. So let's just say you got 4 people, 2 minutes each. This could be a 10 to 15 minute meeting. That's it. So nobody wants a long, boring meeting that's pointless. So you have a very specific agenda. Step 1, go around the table, announce your key numbers for your department. Tell us about your weekly projects and objectives, challenges, news from the marketplace, what's new, and any news to celebrate next. And you got to go quick. So this really puts the emphasis on preparation. We're not going to walk in and, shoot the breeze no, we're there to work. We're there to talk about the numbers. We're there to assess where we're at relative to them. We input the numbers, and then we get back to the task at hand. So that the 2-minute drill, I think, is a super important, helpful way to go about this. The other component is the scorecard. So, okay, we're reporting the numbers. What are we doing with them? We're building the financial statements every single week. We're reforecasting the balance of the month every single week. So week 1, you come in. What did we actually do? What did we say we were going to do? What are the gaps? How are we going to close it next week? So when we meet next week, what are you going to do between now and then to close this gap? Now, it might not work, but this is that process versus outcome goals. Hope is not a strategy. If we're missing our sales and the answer, what are you going to do between now and next week when we meet to close the gap in our sales shortfall? I'm just going to try harder. No, that's not specific. So specific is, if you're in distro, I'm going to call in 10 extra accounts. I'm going to do, we're going to, we've got a whole new marketing push that we're going to make. We've just hired a new sales rep. Our wholesaler is going to do this, the very specific actions. But the key here is, where you stand relative to the goal. And then everybody's reporting on their individual numbers and departments. All right, so we've covered a lot of ground. I've shared a lot of spreadsheets, checklists, documents, things that you can use. So there is a tool that I'm using right now that's pretty cool and pretty inexpensive, and it's called Reach Reporting. And this is a tool that can really supercharge your budgeting, your forecasting, your dashboarding, and your key metrics. Because a lot of what we do, and a lot of the spreadsheets that I've shown you are very manual. There's nothing wrong with that, but spreadsheets have, I personally have a love-hate relationship with them, because I know they're flexible and I know they can work, but they can also break really easy. So there's a tool. There are many tools out there that can eliminate some of the frustrations with spreadsheets. Now, spreadsheets are free. This tool is not free, but again, it's very affordable. But what it can do for you is take your data and present it to you in a way that is going to eliminate a lot of the mistakes from spreadsheets. So we all want dashboards. We want quick visuals. We want to be able to take our data, understand what's actually going on, and make those data-informed decisions, more profitable decisions. So this tool can do that. It basically sits on top of your accounting software, whether it's QuickBooks or Xero or whatever you're using, and it's going to drag those numbers in. It's only a one-way tool. It's going to pull the numbers in, and then you can define, there's a lot of predefined dashboards and KPIs, what you want to be watching. So if you're concerned about sales growth, you can put that in. If you're worried about operating expenses are getting out of control, we want to measure that. If you want it to be very budget specific, actual versus budget, this is good too. There's a lot of KPIs that we want to track. We think about the tap room. Well, and a lot of this, your point of sale could get for you, but sometimes maybe not. So let's talk about one of my favorite KPIs for your tap room is a revenue per barrel. So how many barrels are flowing through your tap room? What's the sales that you're getting? And what's the average revenue per barrel? You'd be surprised how much volatility there is in this. And once you start doing the math, and you're like, oh, that's interesting. So if you can first measure it, maybe put it in a visual way, it's a lot easier to see where you stand relative to either benchmarks, expectations, historical results, and be able to kind of track that, do something about it. It's just going to give you that little red flag of, your revenue per barrel is down 10% from last year. What's going on? Could be any number of things. There's a lot more foamy beer or shift beers or quality control in these cakes, whatever it may be, but you can't fix a problem if you can't see it. So that's on the dashboarding, which I really love. The next is the forecasting side of things, which I've got all the Excel templates. They work, but it does take some work to maintain them and make sure your formulas stay accurate. This eliminates that problem. It's going to basically go in, it's going to grab your data, and it's going to put it into the software and allow you to manipulate it. Manipulate it means sales. What are we going to forecast for sales? I'm looking at the trends. I think taproom food next year is going to be up about 5% based on trends and what we're going to do. I think taproom non-food is going to be flat. Boom, done. And it's going to then seasonally adjust that for you for the new calendar year ahead. Same thing for your cost of goods sold, margins, operating expenses, all the way down through the whole thing. So super helpful there. And then lastly, it will provide for you a monthly financial reporting packet if that's what you want. And it puts it in a nice, it's not for everybody, but I'm thinking of your banks or your maybe outside investors would really appreciate it because it summarizes all the information. It puts it in a format that just looks nice. It looks professional. It incorporates a lot of these KPIs as well as summary reporting data. Because let's face it, you can go into QuickBooks, you can run your reports and send it off, and this is fine. There's nothing wrong with it. But it's like it could be a lot to look at. Whereas just show me like a summary one pager of how we're doing and maybe some charts and graphs. It'll do that for you, and you don't need to think about it. There's a lot of off-the-shelf items that can be useful. So again, this is just a way to take the concepts that we've already talked about and automate them. You still need to learn the concepts. You still need to ask those questions. But this can, again, help automate a good chunk of it. So if we just recap and I leave you with, a simple plan that you can execute on. The plan is simple. It takes work and focus. I'm not minimizing that at all. But this is going to eliminate some of the confusion, some of the overwhelm. It's going to eliminate that feeling like, what is the point of this really? And it's going to give you a simple plan that you can follow and execute. So begin with the end in mind. High-level targets is so important. And again, it really won't take long. And usually I'll guide people to say, what does success look like? Very often when we talk it through, it's, I want to be cash flow positive and I want to be profitable. And okay, now let's get more specific on that. What does profitable mean? Well, I'd like to get at least 10%. Okay, let's set that as our goal. Set it in reality, like, well, what was last year? If last year you're at minus 22%, well, plus 10 might not be maybe we get to break even. But beginning with the end in mind is really setting one kind of key goal, maybe two, and then building your whole plan around it. Next, identifying your stakeholders. What are their requirements? It's often overlooked. Third, outline your team expectations and set that deadline to start and to finish. Use the templates and models. Use something like Reach Reporting if that is something you want to try out, to really automate the process. And then lastly, once that's all done, those weekly financial huddles are essential to keep your eye on the ball and try to identify, are we on track? Are we not? What are we going to do about it? And again, incorporating process goals along with your outcome goals. Outcome goals, what do we want for profitability? 10% to the bottom line. Process goals, what are we going to do in order to achieve that? What exactly we're going to do? So baking in those action items to your plan can be a super helpful way to help you, again, stay on track. So that is what I have for you today. If anyone has any questions now, you can drop them in the old chat. Would love to hear from you. And if not, if you want to hit me up later, I would love to hear from you. Kary at Beer Business Finance is my email. We have the free brewery budget toolkit, which I would definitely recommend. It's free. Just scan it. You pop in your email and you get access to the course. It'll cover all of the templates and spreadsheets and checklists that I've covered here today. So that is yours to try out. So if you decide to do that, I hope you find it valuable and profitable. And either way, I wish you the best in your financial planning journey, in your budgeting journey. And thank you so much for your time today. I've enjoyed presenting this, and hopefully you were able to get something of value out of it. So with that, have a great day. Thank you so much for your time.
Thanks for watching. If you enjoyed this session, we'd love to see you in real life. We host in-person workshops across the country for craft beer professionals just like you that are held in some of the most exciting beer destinations around. These immersive events are designed to help you grow and connect with others. You'll meet peers from across the country and leave with actionable strategies for success. Connection has never been more important, and you can learn more at cbpconnects.com. Cheers. See you there.